Gold trades $4,635, while the dollar index breaks below 98. Three Federal Reserve members dissent in one meeting. That combination rarely appears together. That combination rarely resolves quietly. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, three macro variables just moved at the same time. Let's get straight into it. Lead story today. Federal Reserve policy decision. U.S. 10-year Treasury yield rises to 4.42%. That is a 7 basis point increase. That marks a one-month high. Federal Reserve holds rates unchanged. Three members dissent toward future policy direction, effective April 29, 2026. This follows prior expectations of unified guidance. The unusual detail is the dissent. The dissent. Three members breaking consensus in one decision. That exposes internal division publicly. The timing is what deserves scrutiny, not the hold itself. The timing. Think about what that sequence actually means. A divided central bank during rising yields. A weakening dollar at the same time. Gold holding near $4,635 despite that backdrop. That is not typical alignment. What does the market see that policy communication does not fully reflect? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. The last time the Federal Reserve showed visible dissent during elevated yields, volatility expanded across all asset classes. The data is already telling you something. Let's build it out. Now let's build the full picture because Federal Reserve policy does not exist in a vacuum. Trading economics data has dropped. U.S. 10-year yield prints 4.42% according to U.S. Treasury data. Federal Reserve decision shows three dissenters in the same meeting. FX Street data shows 29% probability of rate hike priced for April 2027. That is a single repricing event. That compares to near zero probability 3 months earlier. Bloomberg data shows gold trading between 46.09 and 46.35. DXY index trades at 98.18, down 0.77% in one session. Oil prices trade above $105 per barrel. That reflects geopolitical premium pricing. These numbers connect directly. Rising yields should pressure gold. Falling dollar should support gold. Geopolitical risk should support gold. The rate of divergence is not slowing. It is compounding. The data is doing the talking. The ones who were dismissed for calling structural divergence, they are not saying much right now. And here is what makes that picture even harder to ignore. Gold holds above $4,600 despite 4.42% yields. Dollar trades below 98 despite hawkish signals. Oil trades above $105 reflecting geopolitical tension. At the same time, markets price 29% chance of future rate hikes. That is not a contradiction, that is the setup. And before anyone takes that as a green light, timing remains uncertain. Setups can take longer than expected to resolve. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. $105 per barrel. Sustained oil pricing above that level impacts everything. Now Iran and global geopolitics, because this is no longer a backdrop. It is the primary variable. Oil trades above $105 per barrel. Strait of Hormuz carries approximately 21 million barrels per day. U.S. policy signals continued pressure on Iran negotiations. Federal Reserve references geopolitical uncertainty and economic outlook. That creates direct cost implications. Higher oil feeds into inflation expectations. Higher inflation supports gold demand as a hedge. Markets are still pricing controlled geopolitical escalation. Look at sustained $105 oil and tell me what probability you assign to stability. When markets start pricing extended disruption, Gold reprices higher, silver reprices with lag. That is the historical pattern. Every time geopolitical risk meets monetary uncertainty, metals move first. It has not been different yet. Gold Western spot at $4,635. Silver trades $73.13. Shanghai silver trades $81.88. That is $9.37 premium. Short-term picture remains conflicted. Gold holds above $4,550 support level. Resistance sits near $4,590 to $4,610. Dollar sits near 98.18 with pressure below 100. If dollar breaks below 97, gold moves toward $4,800 range. If dollar rebounds above $100, gold tests $4,510 support. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what gold does tomorrow. Nobody can. If you think you know, good for you. Current environment shows conflicting macro signals across all assets. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that costs you. So let's run both. The bear case is real. US 10-year yield at 4.42% pressures gold valuation. Markets price 29% chance of future rate hikes supporting dollar strength. Dollar remains structurally supported above 97 level. The bull case is equally real. Gold holds above $4,600 despite rising yields. DXY declines to 98.18, showing weakening currency support. Oil above $105 signals sustained geopolitical premium. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one conclusion. Multiple macro forces are colliding simultaneously. Resolution timing remains unknown. Don't take my word for it. Verify every number I gave you today. Check the data yourself. Trading economics, Federal Reserve releases, US Treasury data, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0 out.